Good morning and welcome to the Killik and Co market update. It's been quite a choppy week for markets. The World Economic Forum in Davos has been taking place, and Greenland has been one of the topics that participants and viewers have been most keen to hear about. Earlier this week, the US president commented that the US needed Greenland for security purposes, and there was an implication that the US might be willing to acquire Greenland by force. Understandably, this caused concern for investors. We saw a spike in the VIX index, known as the Fear Index, which measures expected future volatility. Here it is over the last 12 months. We generally say that investors are in a state of fear when the VIX goes up to 20, which is shown by that pink dashed line. You can see it was significantly above that level last April when all the tariffs were first announced. More recently, the index has been trending around the 15 level, but it spiked up to 20 at the start of this week. This corresponded with a drop in US equities. Here's the S&P since the start of 2026. It briefly dropped into negative territory when the Greenland comments first surfaced, but it recovered following the US president's speech at Davos, in which he said that the US would not use force to acquire Greenland. The US would instead negotiate a deal. Although equities recovered, gold has moved on to yet another record high, which shows that investors are still on the lookout for safe havens. Here's a comparison of the gold price against the S&P 500 over the last 12 months. Gold is now up over 75%. This week we had a couple of negative data points for the UK economy. First up was inflation, which rose to 3.4% in December. Here's the 12-month chart. It had been trending downwards during the third quarter, and it was thought that this would lead to a cut in interest rates, but the latest higher figure might delay that. The rise in inflation was blamed on a couple of factors that are hopefully temporary in nature. This chart shows the areas that changed between November and December. The green bars show the areas that experienced lower prices, and the pink bars show where prices rose. The biggest contributors to the higher inflation reading were transport and alcohol and tobacco. Flight prices were apparently relatively high during December as people were flying around visiting family, and there was also an increase in tobacco tax that was introduced following the last budget. A further negative data point for the UK this month has been the latest GfK consumer confidence data. This surveys approximately 2,000 adults, and it asks them about their personal finance situation, their willingness to make large purchases, and their thoughts on the wider global economy. As of this month, there has not been a single positive monthly confidence reading in the last 10 years. Here's a 30-year chart. You can see that confidence was at a reasonable level until the dot-com bubble burst in the early 2000s. The 2008 financial crisis put a bit of a dent in confidence, as did the Brexit referendum, COVID, and the rise in interest rates that took place in 2022. And lastly, let's end on a positive. The International Monetary Fund has published its latest World Economic Outlook, and it has raised its growth projections for the global economy for 2026. It has said that the impact of tariffs has not been as bad as feared. Investments in technology, particularly AI, are leading to efficiencies, and interest rates globally are on the way down. Here are the figures. The IMF now expects a growth rate of 3.3% for this year. The US economy will grow at 2.4%. The UK, sadly, is only expected to grow 1.3%, but emerging markets are driving that global growth figure, with India predicted to expand by 6.4%. Moving on to have a look at next week. Quarterly earnings season is ramping up and we've got a busy calendar. US defense company Northrop Grumman is reporting, which will be interesting given the global focus on defense. And we've also got results due out from big tech companies Microsoft and Apple. That's it from us. Enjoy the weekend, and we'll see you next Friday.